Hello, everyone. This is Dr. Drew with Ahan Analytics and the Market Breadth. All right, welcome to a new year. It's 2026. 2025 didn't quite end with a positive note that I expected. It was actually much of a big time whimper, and trading the day after New Year's, very low volume, but there were some very interesting things that unfolded. For instance, the AI trade was very bifurcated. Semiconductor stocks did very well, but software was kind of iffy, and particularly software stocks that I think people are going to be undermined by AI. So I got tested right off the bat this year with some of my, if you remember the video I did on what I want to buy in 2026, beating up software stocks was right up there at the top. And sure enough, the market just beat up on some software stocks that I wanted to buy. You'll see some of them in the coming stock charts in the video. Anyway, also, I also noticed industrial commodities, materials. We had, tariff news to start the year too. That, totally forgot that there was tariffs coming on furniture and an upholstery and stuff like that. And the administration pulled that back and it sent those stocks soaring. So we had a lot of interesting things that unfolded. Let's dive right into those stocks and take a look. Of course, I always start with the major indices, leading with my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50, because I'm always keeping an eye on market breadth, and market breadth is still on a downtrend. All right, let's take a look. You can see the purple line. It's showing the primary downtrend. And this is what I mean by the year ended with a whimper. These last 3 trading days of 2025, you can see AT50 hit that downtrend line perfectly and fell back. So this downtrend is still in effect. It's still worrying me that it's still in effect. And, at this point, all I have to do is just keep waiting and waiting and waiting to see whether it will ever break out and hold the breakout. And like I said before, if and when, this downtrend will end at some point, but when it does, I expect market breadth to hit the overbought level and perhaps set up the sell-off or pullback that should happen sometime in the first half of the year. I shouldn't say should, that's what the expectation is. AT50, my favorite technical indicator, closed at 53.4% on the day. And let's just go ahead and take a look at the percentage of stocks trading above their 200-day moving averages, because this is the longer-term measure of the health of market breadth. And you can see that even here, it has fallen below its downtrend. I really was hoping for it to stay above it, but it fell below the very last day of last year. So unfortunately, that means it is reinforcing the bearish message from AT50. So AT200 closed today at 57.8%. All right, let's move into the major indices. This is the S&P 500. You could see here that, after this all-time high, the index has fallen right below the previous double top set up by the Fed rate cuts. The good news here is that, the 20-day moving average held as support. Generally, today it fell. Let's zoom in here. Yeah. So the S&P 500 had a very weird day today because it fell down for a new low. It made it look like, we were heading for 50-day moving average support. Then it popped up. Actually, I may have gotten the order wrong. But anyway, you could see it was an up and down day. Hard to really get. In fact, you shouldn't get a conclusion from this just because it's the first trading day and it's right after New Year's. But still very interesting that it was kind of a stalemate kind of day with a 0.2% gain. The NASDAQ did something similar. It opened the day actually very well. It actually got above the previous day's trading open, which was the intraday high, but then it faded pretty much the whole day. And actually, let's zoom in here. You could see it was actually very negative at one point, but then buyers stepped in and took the NASDAQ right back to the 50-day moving average, which is that red line. So just like the S&P 500 held its 20-day moving average support, the NASDAQ held its 50-day moving average support. Now, IWM, the small caps, this was a good day for small caps. You can see here that it bounced perfectly off of the 50-day moving average support. And I went ahead and took profits on a position that I opened up. You know me, I have a core position of shares, large positions in shares for IWM, but I also will do opportunistic trades on call options. The ones I bought the previous week completely failed, but the ones I bought on the last day of the year worked out very well because of support holding out perfectly for IWM. All right, let's go right into the individual stocks. IGV, the iShares Expanded Tech-Software Sector ETF. This is the poster child for what I was talking about in terms of software stocks having a terrible day. IGV, ticker symbol IGV, fell 2.9%. It's in bearish territory. You can see before it was comfortably trapped between 50-day moving average resistance and 200-day moving average support, which is the blue line. And now it's failed that line. It is technically in bearish position. So software stocks are in bearish position. My desire to buy software stocks this year has been put immediately to the test. You could see CRM, ticker symbol CRM, Salesforce. It fell 4.3%. I was hoping for it to hold 200-day moving average support. I bought shares, I think around here. And then when it fell lower, I also bought a call spread. You can see for CRM, there's a Bollinger Band squeeze forming. That's this black line. It defines price volatility. So when there's a squeeze happening on a stock, it means that price range is compressing, and that when the squeeze resolves, it should lead to a sustained either breakout or breakdown. And of course, I'm hoping for a sustained breakout since I bought into CRM. Now, the software stock that was also on my list that I did not buy is Adobe, ticker symbol ADBE, because it fell 4.8% and crashed below its 50-day moving average and never made the 200-day moving average breakout. That's my condition for buying into Adobe. And let me just pull back to show you how long Adobe has been in this downtrend, since the beginning of 2024, essentially, and it's been trapped by 200-day moving average resistance for over a year now. So Adobe is as bearish as it can get as far as a stock. So I'm not triggering any buys. Microsoft, which is, of course, a very well-known software stock to just about everybody, it too ended the day in bearish position for the first time in a very long time. Microsoft is bearish. Now, I do own shares in Microsoft, so I'm not happy. It fell 2.2% today, closed below its 200-day moving average. And I believe if I zoom in here, no, it didn't quite make a new multi-month low, but it's testing it right there. That November low is being tested. So if there's follow-through selling in Microsoft, then Microsoft will be in bearish position as well. Datadog is another software stock. It's a different kind of software stock because it's kind of on the infrastructure side for networks. You could see that it has just been selling, dripping down since this monster move, 23.1% post-earnings gain. And I think I bought around 50-day moving average support, thought it would hold. It did hold for maybe about 1.5 weeks, and then the sellers just took over again and kept pushing the stock down, and now it's testing the 200-day moving average and testing me, because if it closes lower again, actually two lower closes, I'm just going to have to get out of this position and just take my losses. So Datadog, ticker symbol DDOG. Now let's move on to more direct AI plays. I've been watching AMD every day, every week. Ticker symbol AMD, Advanced Micro Devices. For those of you who know, I did some videos on this. I actually got out of my position after this 50-day moving average breakdown was confirmed. But now AMD looks constructive. It's consolidated. It looks like it wants to make a run for 50-day moving average breakout. That would pull me right back into the stock. So I'm keeping a very close eye on this. AMD is essentially part of the AI trade now. Now, moving on to another AI trade that I got out of and I got back into today is Corning Incorporated, ticker symbol GLW, had a great day today, 3.6% gain. Essentially, I'm calling the 50-day moving average support successfully tested. This close was a multi-week close high, and I think it's going to test, it's on pace to test the previous all-time high and perhaps move higher. So that's why I moved into Corning Incorporated, ticker symbol GLW right now. Now, one stock that's kind of at the crossroads of software in AI is Palantir. And Palantir chose the software side for its performance on the day. Big move down, 5.6%. it's essentially, I'm not going to call it bearish. It is below its 50-day moving average, but it is kind of, I'm going to raise a yellow flag on this one because it's back below its double top that was formed over the summer and the fall. And anytime a stock falls back below a double top, it means that it could be returning to a toppy type position. And you can see here that, yes, Palantir is looking pretty toppy because look at all of these tops here. It keeps coming in around in this range meaning, let's say 180 to 190, 195, and failing. The only thing that that anyone who's interested in Palantir needs to be keeping an eye on is what happens if it comes down to 200-day moving average support, because that's going to be a major test. You can see I'm just scrolling back. The last time Palantir even sniffed the 200-day moving average support was in mid 2023, so going on almost 3 years. So that will be a major moment for the stock. I'm going to be watching Palantir a lot more closely going forward. Caterpillar was my best position of the day. I got in because, actually, I think I got in earlier on this test of 50-day moving average support, held it even as the stock drifted lower, and you can see 50-day moving average support held again. Big move up, 4.5% gain. Even volume picked up over the last several days of trading. So I think this is a very bullish move. It's been confirmed. I'm going to continue to hold my call spread. It expires in 2 weeks. I guess wish me luck. Unless, of course, you're short, then you don't want it to keep going up. Now, also in the industrial space, there's a lot of good stuff that's happening in the industrial and commodity space and materials. This is ATI Incorporated, ticker symbol ATI. It had a big day today, 3.9% gain, new all-time high. This is a stock I've traded in and out of. I mean, I'm looking back now and wishing that I had just stuck with this overall uptrend once it broke out again. So I'm going to be late in returning to this position, but I will be returning to it at some point and just buying and holding it and accumulating the stock. Tesla is interesting. Tesla, ticker symbol TSLA, it actually fell 2.6%, closed below its 50-day moving average on a day when it released sales numbers that I thought investors didn't care about, because everyone's looking forward to the robo-taxis and the Optimum robot, and no one seems to care that the car business has been lagging and actually is pretty much positioned to keep losing over time. We don't need to go into all the catalysts. Hopefully you're very well familiar with those. But anyway, it's back below its 50-day moving average. It's not bearish. It's just sort of chopping around, but because it's below its former closing all-time high, it's not in a good position. It's in a very poor trading position, unless you want to trade this for a bounce back to the former all-time high. I mentioned earlier that today was even a day with tariff news. One of the stocks that was impacted was RH. It used to be called Restoration Hardware. You can see here it had a big monster day, 8% gain, 8% gain, but it stopped cold at 200-day moving average resistance. If I pull back, you can see why that's important, that the last time it broke down below the 200-day moving average, it never recovered, hasn't even tested 200-day moving average until today. Now, the way I look at this is that the stock has been rallying and even rebounded from earnings, probably in anticipation of a rollback of the tariffs, but the tariffs are only rolled back for a year. So this, if you think about before today, that the stock was already priced in for a delay, today should be the full realization of that. And unless some other new catalyst comes, Restoration Hardware is going to be at risk for falling back down. So I'm going to be looking at this for a potential short position, but we'll see. I'm not going to be too bold just yet on short positions. Silver has had a very up and down, topsy-turvy day. Look at this. On December 26th, the day after Christmas, it soared 9.1%. And then the exchanges, the commodities exchange, I guess, got scared that people were over speculating. They increased the leverage requirements, the margin requirements, and silver almost reversed that entire gain the very next day. Then it rebounded again, 4.5%. Then it fell again, 6.6%. This is a lot of choppiness. I don't want to play in this pool until things settle down or the uptrend resumes. This kind of choppiness, the big gaps up and down, are oftentimes a signal of a top. So that's the part I'm going to be looking out for, because it also could be an indicator that the other commodity trades are about to take a rest. Finally, one-off is FICO. This is Fair Isaac Corporation, ticker symbol FICO. It's in bearish position. Pulte, who is the FHFA director, had been really nagging and writing on FICO for the fees that it charges for its mortgage products, mortgage information products. And I thought they had reached an agreement. The stock continued to churn a bit even after the agreement was reached, or actually, I shouldn't say agreement, more like a détente or a peace between FICO and Pulte, the director. But now the stock looks suspicious again. Volume is not that great, but it is in bearish position with 2 consecutive big down days. It fell 2.8% today. It confirmed a breakdown below the 200-day moving average and the 50-day moving average. FICO is in bearish position. All right. That's all the individual charts for today. Thanks for checking this out. As a reminder, if you like this content, please share it with others. You can hit the like button. That helps the algorithm knows what's up. If you have questions or feedback, you can put them down below. And of course, you can subscribe to this channel if you want to get notified of future content. Thanks for checking this out. And I will see you the next time. Take it easy and start off your new year.